So what happens is I realize, oh my God, I'm not as smart as I thought. It's not easy to become a millionaire through investing in 2 weeks. And so here is where there was a pivotal moment. One, I could have doubled down and said, I just picked the wrong stock. Let me pick another stock. This is very similar to what you hear with people in the crypto world. Well, my investment, quote, investment dropped 50%, but I got to do this coin or that coin, et cetera. What I chose to do is go a different route and say, you know what? I don't think I'm that smart about investing. And I actually want to learn how fundamental basic investing works. So things like low cost, long term, things like reading about John Bogle's philosophy, et cetera. And I started to learn about it. And I realized you could spend your entire life trying to trade, but traders hardly ever make money over the long term.
And if we were going to define trade, timing the market.
Yeah, it's like...
I understand this stock.
Yeah.
It's undervalued.
Yeah.
I'm going to buy because I know it's going back
And I'm
up.
going to do it short term, right? So I'm going to create this narrative that, ooh, this stock, look at the trading, look at the chart, and I'm going to try to make quick money in 4 weeks. Everybody now knows somebody who trades. Those people almost all lose money. You'll notice they're your best friend when they're making tons of money. Hey, bro, I made 600% in this stock. When it goes down, you don't really hear from them, okay? That's called survivorship bias. Those people simply disappear, but they're really loud when they're making money. And you learn that mathematically, even top Wall Street investors, over 80% of them don't even beat the market. What does that mean? It means that you watching this show right now can pick a simple Vanguard fund and you can beat over 80% of these fancy Wall Street suits. These guys were paid over $1 million a year. This stuff is really hard to believe. It's really hard to believe because it's counterintuitive, like 1% fees can be 28% out the door. People also don't understand compound growth. So for example, a lot of people right now are really dissatisfied. Hey, I don't have enough money. I'm not gonna ever be able to afford a house. And so therefore, I'm gonna have to invest in these high risk investments that are pure speculation. What's really happening there is they don't understand how compound interest works in 1 year than the last 20 years combined.
Because of
compound interest,
right.
Yeah, because of how it works. So
is it really as simple as 1 doubling to 2 isn't very interesting, 2 doubling to 4 is not very interesting, but when you start getting to 1,000 doubling, that becomes real interesting real fast.
And it happens, and we know the math. If you plug in your numbers to a compound interest calculator, you can predict essentially down to the month and year when you will become a millionaire.
And does that calculate a doubling every 7 years, or is that a made-up thing?
No, you can change your assumptions. I generally choose a 7% return rate, 7 to 8%, because historically that's what we know happens, and that factors inflation in. So at roughly 7 to 8%, your money's doubling approximately every 10 years.
And people are going to get that by putting it in the stock market and forgetting about it.
And just contributing to it every single month.
Dollar cost average.
Yeah, $50, $500, $5,000, whatever works for you. That's how it works. That's simple, boring. So a lot of people watching this going, oh, this old guy, this Luddite, I prefer crypto, it's really exciting. Listen, investing is not about excitement. You want excitement, get a dog, watch a TNT drama.